Let's get ready for the Virginia Real Estate Exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Let's begin with a review of Virginia real estate law and practice. Fair housing laws in Virginia. Which of the following actions is prohibited under the Virginia Fair Housing Law regarding rental property? Is it A, refusing to rent to families with children? B, requesting a security deposit? C, setting income requirements for tenants? Or D, enforcing no smoking policies? The answer is A, refusing to rent to families with children. Under Virginia Fair Housing Law, it is illegal to refuse to rent to families with children as it constitutes discrimination based on familial status. Which characteristic is not protected under the Virginia Fair Housing Law? Is it A, race, B, income level, C, religion, or D, sex? The answer is B, income level. Income level is not included as a protected characteristic under the Virginia Fair Housing Law, which covers race, color, religion, sex, disability, familial status, and national origin.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
What is the purpose of the Virginia Fair Housing Office? Is it A, to promote affordable housing? B, to ensure equal housing opportunities? C, to provide tenant counseling services? Or D, to offer rent subsidies? The answer is B, to ensure equal housing opportunities. The Virginia Fair Housing Office's primary purpose is to enforce fair housing laws and ensure equal housing opportunities by investigating complaints of discrimination. Under the Virginia Fair Housing Law, which of the following is not considered a discriminatory action? Is it A, refusing to make reasonable accommodations for a disabled tenant? B, charging higher rent to people of a certain race? C, enforcing community-wide sound restrictions? Or D, posting a "No Children Allowed" sign? The answer is C, enforcing community-wide sound restrictions. Enforcing community-wide sound restrictions is not discriminatory, provided they are uniformly applied to all tenants, regardless of any protected characteristic. If a tenant believes they have been discriminated against under the Virginia Fair Housing Law, which authority should they file a complaint with? Is it A, Federal Bureau of Investigation, FBI? B, Virginia Fair Housing Office? C, the Internal Revenue Service, IRS? Or D, Virginia Department of Taxation? The answer is B, Virginia Fair Housing Office. Tenants who believe they have faced discrimination should file a complaint with the Virginia Fair Housing Office, which oversees the enforcement of state fair housing laws. Under the Virginia Fair Housing Law, which of the following groups is protected from discrimination? Is it A, B, families with children? C, pet owners? Or D, people with tattoos? The answer is B, families with children. The Virginia Fair Housing Law protects individuals from discrimination based on race, color, religion, national origin, sex, elderliness, familial status, and disability. What action can the Virginia Fair Housing Office take if a complaint of discrimination is found to be valid? Is it A, cancel the lease agreement immediately? B, impose fines and order corrective actions? C, seize the property in question? Or D, force the property owner to sell their property? The answer is B, impose fines and order corrective actions. The Virginia Fair Housing Office can impose fines and order other corrective actions to ensure compliance with fair housing laws if a discrimination complaint is validated. Which of the following is not considered a protected class under the Virginia Fair Housing Law? Is it A, age, B, sexual orientation, C, national origin, or D, disability? The answer is B, sexual orientation. While sexual orientation is protected under federal guidelines, it is not specifically listed under the traditional protected classes of the Virginia Fair Housing Law, which includes race, color, religion, national origin, sex, elderliness, familial status, and disability. Real estate contracts in Virginia. What must be included in a valid real estate sales contract in Virginia? Is it A, the seller's phone number, B, a legal description of the property, C, the buyer's place of employment, or D, names of neighbors? The answer is B, a legal description of the property. A legal description of the property is necessary for a valid real estate sales contract in Virginia, along with parties' names, purchase price, and signatures. Which clause in a Virginia real estate contract allows a buyer to back out if financing is not secured? Is it A, inspection contingency clause, B, financing contingency clause, C, escrow agreement clause, or D, property disclosure clause? The answer is B, financing contingency clause. A financing contingency clause provides protection for the buyer, enabling them to withdraw from the contract if they are unable to obtain the necessary financing. In Virginia, how long does a buyer typically have to conduct due diligence after signing a real estate purchase agreement? Is it A, 30 days, B, as long as necessary, C, 10 to 15 days, or D, 5 days? The answer is C, 10 to 15 days. The due diligence period in Virginia real estate contracts is usually between 10 to 15 days, though the exact duration is specified in the contract. What is the primary purpose of the property disclosure statement in Virginia real estate transactions? Is it A, to provide the buyer with a history of the property's previous owners, B, to inform the buyer of any material defects in the property, C, to outline the community rules and HOA regulations, or D, to disclose tax information about the property? The answer is B, to inform the buyer of any material defects in the property. The primary purpose of the property disclosure statement is to inform the buyer of any known material defects in the property, ensuring transparency in the transaction. What happens if a buyer defaults on a real estate contract in Virginia? Is it A, the buyer automatically forgoes their earnest money deposit, B, the buyer can renegotiate the contract terms without penalty, C, the seller must return all deposits to the buyer, or D, the contract is nullified and no penalties are applied? The answer is A, the buyer automatically forgoes their earnest money deposit. In Virginia, if a buyer defaults on a real estate contract, they typically forfeit their earnest money deposit unless specified otherwise in the contract. This acts as a penalty for the default. Which provision in a Virginia real estate sales contract allows a buyer to back out if the property appraises for less than the purchase price? Is it A, finance contingency clause, B, appraisal contingency clause, C, inspection contingency clause, or D, default clause? The answer is B, appraisal contingency clause. The appraisal contingency clause allows the buyer to terminate the contract if the property appraises for less than the agreed purchase price, protecting them from overpaying. In Virginia, what is required for a real estate contract to be enforceable? Is it A, verbal agreement, B, written agreement, C, handshake agreement, or D, third-party witness? The answer is B, written agreement. Under the statute of frauds, real estate contracts must be in writing and signed by the parties involved to be legally enforceable in Virginia. What is the function of an as-is clause in a Virginia real estate contract? Is it A, to ensure the property is sold with no repairs? B, to guarantee the buyer's financing? C, to provide a timeline for closing? Or D, to list the buyer's contingencies? The answer is A, to ensure the property is sold with no repairs. An as-is clause in a Virginia real estate contract states that the property is being sold in its current condition and the seller will not make any repairs.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Disclosures required by Virginia law. What must be disclosed to prospective buyers under Virginia law regarding property boundaries? Is it A, the exact boundaries as outlined by a recent survey? B, any known encroachments or easements? C, the zoning classification of the surrounding properties? Or D, the property's previous sale prices? The answer is B, any known encroachments or easements. Virginia law mandates sellers to disclose any known encroachments or easements that might affect the property's boundaries and use. Under Virginia law, what is the required disclosure regarding the presence of lead-based paint? Is it A, only if the residence was constructed before 1978? B, for all residential properties regardless of construction year? C, only if there is visible evidence of lead-based paint? Or D, if requested by the buyer? The answer is A, only if the residence was constructed before 1978. Under the Federal Residential Lead-Based Paint Hazard Reduction Act, sellers must disclose the presence of lead-based paint in homes built before 1978. What types of environmental contamination must be disclosed under Virginia law? Is it A, all known material facts adversely affecting the property's value? B, contaminations found within the last 5 years? C, only contamination directly affecting water quality? Or D, only if the contamination is currently remediated? The answer is A, all known material facts adversely affecting the property's value. Virginia law requires the disclosure of all known material adverse facts, including any type of environmental contamination that could affect the property's value. Under Virginia real estate law, what must a seller disclose regarding property improvements done without permits? Is it A, provide a statement listing all such improvements? B, disclose that certain improvements were made without permits only if it affects the safety or habitability? C, only disclose unpermitted improvements if asked by the buyer? Or D, disclose only if the improvements exceed a certain value threshold? The answer is B, disclose that certain improvements were made without permits only if it affects the safety or habitability. Sellers are required to disclose any unpermitted property improvements that could affect the safety or habitability of the property, according to Virginia law. In which scenario must a Virginia seller disclose the property's history of structural damage? Is it A, when there has been damage from a natural disaster within the last 3 years? B, when the property has had any structural issues regardless of repair status? C, only if the buyer specifically inquires about structural integrity? Or D, if the damage exceeds a repair cost of $10,000? The answer is B, when the property has had any structural issues regardless of repair status. Virginia law requires sellers to disclose any known structural damage or issues, regardless of whether repairs have been made. This ensures the buyer is aware of potential past problems. Under Virginia law, what must be disclosed regarding the presence of defective drywall in a property? Is it A, only if asked by the buyer? B, never needed to disclose. C, if the property was built during a certain time frame. Or D, only in properties over 20 years old. The answer is C, if the property was built during a certain time frame. Virginia requires sellers to disclose the presence of defective drywall, especially in properties built or renovated during periods when such materials were commonly used. What must a Virginia seller disclose regarding property noise levels? Is it A, noise levels must never be disclosed? B, only if the noise levels exceed a certain decibel range? C, if the property is in a designated airport noise zone? Or D, always disclose noise levels regardless of environment? The answer is C, if the property is in a designated airport noise zone. Virginia law mandates the disclosure of noise levels for properties located within designated noise areas, such as those near airports, to inform potential buyers of the potential noise impact. Transfer of title in Virginia. Which of the following is a requirement for a valid deed in Virginia? Is it A, the deed must be signed by the grantor? B, the deed must be signed by the grantee? C, the deed must include the grantor's social security number? Or D, the deed must be notarized in the presence of a judge? The answer is A, the deed must be signed by the grantor. In Virginia, a valid deed must be signed by the grantor, include a legal description of the property, and be delivered to and accepted by the grantee. Notarization is typically required, but does not need to be in front of a judge. What is the purpose of recording a deed in Virginia? Is it A, to transfer ownership immediately? B, to make the transaction a matter of public record? C, to provide the grantee with legal advice? Or D, to ensure that the property taxes are paid? The answer is B, to make the transaction a matter of public record. Recording a deed in Virginia serves to put the public on notice of the property transfer, protecting the grantee's interest against claims by subsequent purchasers or creditors. In Virginia, which type of deed offers the grantee the least amount of protection? Is it A, general warranty deed? B, special warranty deed? C, quitclaim deed? Or D, grant deed? The answer is C, quitclaim deed. A quitclaim deed transfers the grantor's interests, if any, without any warranties against title defects. It offers the least protection compared to general and special warranty deeds. Which clause in a deed states the type of estate being conveyed to the grantee in Virginia? Is it A, habendum clause? B, granting clause? C, covenant clause? Or D, testimonium clause? The answer is A, habendum clause. The habendum clause in a deed specifies the nature and extent of the ownership interest being granted, indicating whether it is a fee simple, life estate, or other interest. In Virginia, what legal document is used to remove a cloud on the title? Is it A, quitclaim deed? B, general warranty deed? C, easement deed? Or D, special warranty deed? The answer is A, quitclaim deed. A quitclaim deed can remove a cloud on the title by allowing the party with a potential claim to release their interest in the property, thus clarifying the title for the current owner. Which of the following elements is required for a deed to be valid in Virginia? Is it A, a witness signature? B, consideration? C, photographic evidence? Or D, an attached survey? The answer is B, consideration. Consideration is necessary for a deed to be valid in Virginia. It shows that something of value was exchanged for the property, fulfilling a critical legal requirement. What does the term cloud on the title refer to in Virginia real estate transactions? Is it A, a type of title insurance? B, a document proving ownership? C, an encumbrance or claim that may impair title? Or D, a method of title transfer? The answer is C, an encumbrance or claim that may impair title. A cloud on the title indicates an encumbrance or claim that might impair the title's status. Resolving such clouds typically involves legal actions like a quiet title lawsuit. Earnest money and escrow in Virginia. When must earnest money be deposited into an escrow account in Virginia? Is it A, within 5 banking days of receipt, B, within 2 banking days of receipt, C, within 7 calendar days of receipt, or D, within 10 calendar days of receipt? The answer is B, within 2 banking days of receipt. According to Virginia real estate law, earnest money must be deposited into the broker's escrow account within 2 banking days of receipt to ensure funds are properly handled. Who is responsible for holding the earnest money until closing in Virginia? Is it A, the seller's attorney, B, the buyer's bank, C, the real estate broker, or D, the title insurance company? The answer is C, the real estate broker. In Virginia, the real estate broker holds the earnest money in an escrow account until the transaction is closed or otherwise directed by the parties involved. What happens to the earnest money if the sale is not completed and the buyer and seller cannot agree on its disbursement? Is it A, the broker keeps the earnest money, B, the broker must hold the funds until a mutual agreement is reached or a court orders the disbursement, C, the buyer automatically gets the earnest money back, or D, the seller automatically gets the earnest money? The answer is B, the broker must hold the funds until a mutual agreement is reached or a court orders the disbursement. Virginia law requires that the broker holds the earnest money in escrow until a mutual agreement is reached by the buyer and seller or until a court order dictates the disbursement. What must a real estate broker in Virginia do if they receive earnest money in the form of a personal check? Is it A, immediately transfer funds to a cashier's check, B, deposit the check into the escrow account within 2 banking days of acceptance of the offer, C, hold the check until closing, or D, return the check to the buyer? The answer is B, deposit the check into the escrow account within 2 banking days of acceptance of the offer. Virginia real estate regulations require brokers to deposit earnest money received via personal check into the escrow account within 2 banking days after acceptance of the offer. In Virginia, what must the broker do upon receiving written notice that the contract has been terminated before a closing? Is it A, transfer funds to the seller immediately, B, hold the earnest money in escrow until proper authorization to disburse is received, C, refund the earnest money to the buyer, or D, send the funds to the State Real Estate Commission? The answer is B, hold the earnest money in escrow until proper authorization to disburse is received. When a contract is terminated, the broker must hold the earnest money in escrow until receiving proper written instructions or a court order dictating how the funds should be disbursed. In Virginia, what must be done with earnest money if a transaction falls through and there is a dispute? Is it A, return it to the buyer immediately, B, hold it in escrow until the dispute is resolved, C, divide it equally between the buyer and seller, or D, transfer it to the real estate board? The answer is B, hold it in escrow until the dispute is resolved. According to Virginia real estate law, earnest money must be held in escrow by the broker until the buyer and seller resolve the dispute or the court orders its disbursement. Which party typically holds the earnest money in escrow during a real estate transaction in Virginia? Is it A, the seller, B, the buyer, C, the title company, or D, the lender? The answer is C, the title company. In most cases, the earnest money is held by a neutral third party, such as the title company or real estate broker, until the real estate transaction is completed.
Notice the code in the corner. When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Virginia real estate taxes. What is the primary purpose of real estate taxes in Virginia? Is it A, to fund federal programs, B, to fund local government services and infrastructure, C, to finance private sector projects, or D, to reduce national debt? The answer is B, to fund local government services and infrastructure. In Virginia, real estate taxes are levied to support local government services and infrastructure, such as education, public safety, and transportation. Which authority is responsible for determining the assessed value of a property for tax purposes in Virginia? Is it A, state government, B, local tax assessor, C, federal government, or D, real estate agents? The answer is B, local tax assessor. In Virginia, the local tax assessor is responsible for appraising properties to determine their assessed value for taxation purposes. How often are property assessments typically conducted in Virginia? Is it A, every year, B, every 2 years, C, every 10 years, or D, only when the property is sold? The answer is A, every year. Annual property assessments help ensure that property taxes are based on current market values, allowing for fair taxation in Virginia. What is the role of the Board of Equalization in Virginia? Is it A, setting tax rates, B, appraising property values, C, hearing appeals on property assessments, or D, collecting taxes? The answer is C, hearing appeals on property assessments. The Board of Equalization conducts hearings for property owners who wish to appeal their property assessments, ensuring the assessment process is fair and accurate. Under what circumstances might a Virginia property owner qualify for a property tax exemption? Is it A, owning a commercial property, B, making significant home improvements, C, meeting criteria for age, disability, or veteran status, or D, renting out the property? The answer is C, meeting criteria for age, disability, or veteran status. In Virginia, property owners may qualify for tax exemptions based on criteria like age, disability, and veteran status, as these are designed to provide relief to those in need. What is the penalty for late payment of real estate taxes in Virginia? Is it A, a fixed fee of $50, B, 12% annual interest on unpaid taxes, C, 10% of the unpaid tax or $10, whichever is greater, or D, 5% of the total annual property value? The answer is C, 10% of the unpaid tax or $10, whichever is greater. In Virginia, the penalty for late payment of real estate taxes is 10% of the unpaid tax or $10, whichever is greater. This aims to encourage timely tax payments and ensure proper funding for public services. Which of the following is not considered when determining the assessed value of a property in Virginia? Is it A, location, B, size of the property, C, the owner's income, or D, condition of the property? The answer is C, the owner's income. The assessed value of a property in Virginia is determined by factors like location, size, and condition. However, the property owner's income is not a factor in this assessment. Virginia real estate licensing and regulation. Which of the following is required to obtain a real estate salesperson's license in Virginia? Is it A, completing 60 hours of pre-license education, B, being at least 18 years old, C, having a bachelor's degree, or D, submitting 3 letters of recommendation? The answer is B, being at least 18 years old. To obtain a real estate salesperson's license in Virginia, Applicants must be at least 18 years old, complete 60 hours of pre-license education, and meet other requirements set by the Virginia Real Estate Board. What is the purpose of the Virginia Real Estate Board? Is it A, to set interest rates for mortgages, B, to regulate the real estate industry in Virginia, C, to offer loans to first-time homebuyers, or D, to establish building codes? The answer is B, to regulate the real estate industry in Virginia. The Virginia Real Estate Board's primary responsibility is to regulate the real estate industry, including licensing and disciplining agents and brokers to ensure public protection. How often must a Virginia real estate licensee renew their license? Is it A, every year, B, every 2 years, C, every 3 years, or D, every 5 years? The answer is B, every 2 years. In Virginia, real estate licensees must renew their licenses every 2 years to keep their credentials active and continue practicing legally. Which of the following activities requires a real estate license in Virginia? Is it A, selling your own home, B, acting as a property manager for multiple rental properties, C, providing home staging services, or D, offering mortgage brokerage services? The answer is B, acting as a property manager for multiple rental properties. In Virginia, activities such as acting as a property manager for multiple properties on behalf of others require a real estate license as outlined by the Virginia Real Estate Board. Which of the following is a duty of a principal broker in Virginia? Is it A, managing trust accounts, B, submitting weekly reports to the VREB, C, conducting property appraisals, or D, performing home inspections? The answer is A, managing trust accounts. Principal brokers have several responsibilities, including managing trust accounts, ensuring compliance with real estate laws, and supervising salespersons under their brokerage. What action must a Virginia real estate licensee take if they are convicted of a felony? Is it A, nothing, as long as their work remains unaffected, B, report the conviction to the Virginia Real Estate Board within 30 days, C, wait until their license renewal to report the conviction, or D, submit a letter of explanation within 1 year of the conviction? The answer is B, report the conviction to the Virginia Real Estate Board within 30 days. Virginia real estate law stipulates that licensees must report any felony convictions to the Virginia Real Estate Board within 30 days. What is required for a salesperson to maintain active status in Virginia? Is it A, completing 16 hours of continuing education every 2 years, B, submitting a quarterly performance report, C, paying an annual licensing fee, or D, receiving a positive performance review from their broker? The answer is A, completing 16 hours of continuing education every 2 years. In Virginia, real estate salespersons must complete 16 hours of continuing education every 2 years to renew their license and maintain active status. Let's continue with Virginia real estate finance. Loan fundamentals. What type of loan allows for periodic increases in the payment amount to reduce the loan term? Is it A, fixed-rate mortgage, B, graduated payment mortgage, C, growing equity mortgage, or D, adjustable-rate mortgage? The answer is C, growing equity mortgage. A growing equity mortgage is designed to increase payment amounts periodically, which reduces the term of the loan by paying down the principal faster. This type of loan helps borrowers pay off their loans quickly while potentially saving on interest costs. Which document indicates a borrower's promise to repay a loan and includes the loan amount, interest rate, and repayment terms? Is it A, deed of trust, B, promissory note, C, title insurance policy, or D, mortgage insurance? The answer is B, promissory note. A promissory note is a legal document wherein the borrower promises to repay a loan, specifying the loan amount, interest rate, and repayment schedule. It is essential for mortgage agreements and illustrates the borrower's debt obligation. Which of the following is a primary market lender in real estate finance? Is it A, Federal National Mortgage Association, Fannie Mae; B, Savings and Loan Associations; C, Government National Mortgage Association, Ginnie Mae; or D, Federal Home Loan Mortgage Corporation, Freddie Mac? The answer is B, Savings and Loan Associations. Savings and loan associations are primary market lenders that provide mortgage loans directly to borrowers. Primary market lenders originate the loans, while secondary market entities like Fannie Mae and Freddie Mac purchase and securitize these loans. What does the term amortization refer to in real estate finance? Is it A, increasing the loan term; B, charging interest on a loan; C, gradual repayment of a loan through regular payments; or D, adjusting the loan's interest rate periodically? The answer is C, gradual repayment of a loan through regular payments. Amortization is the process of gradually repaying a loan through scheduled, periodic payments that include both principal and interest. This leads to the eventual full repayment of the loan over its term, commonly seen in fixed-rate mortgages. Which clause in a mortgage allows the lender to demand immediate repayment if the borrower defaults? Is it A, acceleration clause; B, alienation clause; C, prepayment clause; or D, defeasance clause? The answer is A, acceleration clause. An acceleration clause allows the lender to demand the full repayment of the loan balance immediately if the borrower defaults on the loan. This clause provides the lender a remedy to recover their investment quickly in the case of borrower default. What type of mortgage requires the borrower to make higher payments periodically that go towards the principal balance? Is it A, adjustable rate mortgage; B, graduated payment mortgage; C, interest-only mortgage; or D, reverse mortgage? The answer is B, graduated payment mortgage. A graduated payment mortgage, GPM, starts with lower payments that gradually increase at predetermined levels, aiming to make upfront costs lower and allowing time for the borrower's income to increase. What is the purpose of a due-on-sale clause in a mortgage contract? Is it A, to allow the lender to adjust the interest rate; B, to require the borrower to fully repay the loan upon sale of the property; C, to permit a second mortgage on the property; or D, to penalize the borrower for late payments? The answer is B, to require the borrower to fully repay the loan upon sale of the property. A due-on-sale clause ensures that the lender can require full repayment of the loan if the property is sold or otherwise transferred, preventing assumption of the loan by a new buyer without the lender's consent. Loan types. Which type of loan is typically insured by the Federal Housing Administration? Is it A, conventional loan; B, Veterans Affairs VA loan; C, Federal Housing Administration FHA loan; or D, U.S. Department of Agriculture USDA loan? The answer is C, Federal Housing Administration FHA loan. An FHA loan is insured by the Federal Housing Administration and allows borrowers with lower credit scores and smaller down payments to qualify for a mortgage. These loans are part of a federal program that aimed at encouraging home ownership. What is a primary benefit of obtaining a VA loan? Is it A, higher interest rates; B, zero down payment; C, no employment verification; or D, limited loan amounts? The answer is B, zero down payment. VA loans, guaranteed by the Department of Veterans Affairs, offer veterans and military personnel significant benefits, including the possibility of purchasing a home with zero down payment, lower interest rates, and no requirement for private mortgage insurance, PMI. Which of the following statements is true about conventional loans? Is it A, they are guaranteed by the federal government? B, they have more flexible credit requirements compared to FHA loans? C, they require private mortgage insurance, PMI, if the down payment is less than 20%. Or D, they are only available to first-time homebuyers? The answer is C. They require private mortgage insurance, PMI, if the down payment is less than 20%. Conventional loans are private mortgages, not insured by the federal government. They often require PMI if the borrower makes a down payment of less than 20% to protect lenders from the potential risk of default. Which type of loan is specifically designed for rural property buyers? Is it A, conventional loan? B, Federal Housing Administration, FHA loan? C, Veterans Affairs, VA loan? Or D, U.S. Department of Agriculture, USDA loan? The answer is D, U.S. Department of Agriculture, USDA loan. USDA loans are backed by the U.S. Department of Agriculture and are intended to develop rural areas by offering more affordable housing options. They are known for requiring zero down payment and have flexible credit requirements. Which loan type typically does not require private mortgage insurance, PMI, regardless of the down payment amount? Is it A, conventional loan? B, Federal Housing Administration, FHA loan? C, Veterans Affairs, VA loan? Or D, U.S. Department of Agriculture, USDA loan? The answer is C, Veterans Affairs, VA loan. VA loans are part of a benefit program for U.S. military veterans and active service members guaranteed by the Department of Veterans Affairs. These loans do not require private mortgage insurance, even if no down payment is made. What is one primary difference between an FHA loan and a conventional loan? Is it A, FHA loans are typically used only by first-time homebuyers? B, conventional loans require mortgage insurance for any down payment below 20%. C, FHA loans always have lower interest rates than conventional loans. Or D, conventional loans do not have any income limitations for borrowers. The answer is B, conventional loans require mortgage insurance for any down payment below 20%. FHA loans are insured by the Federal Housing Administration, while conventional loans are not government insured. Conventional loans often require private mortgage insurance if the down payment is less than 20%. Which loan type is available exclusively for eligible veterans, service members, and certain military spouses? Is it A, conventional loans? B, Federal Housing Administration, FHA loans? C, Veterans Affairs, VA loans? Or D, U.S. Department of Agriculture loans? The answer is C, Veterans Affairs, VA loans. VA loans are backed by the Department of Veterans Affairs and are available exclusively to eligible service members, veterans, and certain military spouses. They often require no down payment and no private mortgage insurance.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Loan qualifications. What is the minimum credit score required by most lenders for a conventional loan in Virginia? Is it A, 620, B, 580, C, 640, or D, 700? The answer is A, 620. The minimum credit score required by most lenders for a conventional loan is 620. Lenders evaluate credit to determine loan eligibility and terms. Which type of income is typically not considered when qualifying for a mortgage in Virginia? Is it A, B, commission, C, child support payments, or D, gifts? The answer is D, gifts. When qualifying for a mortgage in Virginia, lenders consider consistent income sources such as salary and child support. Gifts are usually not seen as a reliable source of income. What is the maximum debt-to-income (DTI) ratio generally accepted by lenders for conventional loans in Virginia? Is it A, 28%, B, 36%, C, 43%, or D, 50%? The answer is C, 43%. Lenders generally require that the debt-to-income DTI ratio not exceed 43% for conventional loans to ensure that borrowers can manage their debts responsibly. In Virginia, how many years of continuous employment are generally required to qualify for a mortgage? Is it A, 1 year, B, 2 years, C, 3 years, or D, 5 years? The answer is B, 2 years. Lenders usually require at least 2 years of continuous employment to qualify for a mortgage. This time frame helps assure them of the borrower's steady income. Which of the following is a common requirement for verifying assets when applying for a mortgage in Virginia? Is it A, pay stubs, B, bank statements, C, rental agreement, or D, employment verification letter? The answer is B, bank statements. Lenders typically require recent bank statements to verify an applicant's assets. This ensures the borrower has sufficient funds for down payments, closing costs, and reserves. What is one of the key factors lenders in Virginia consider when determining a borrower's eligibility for a mortgage? Is it A, credit score, B, marital status, C, number of dependents, or D, political affiliation? The answer is A, credit score. In Virginia, as well as nationwide, lenders primarily consider credit scores to determine a borrower's creditworthiness. Other factors include income levels, employment history, and debt-to-income ratio. Which document is typically required to prove employment history when applying for a mortgage in Virginia? Is it A, birth certificate, B, pay stub, C, passport, or D, utility bills? The answer is B, pay stub. Lenders in Virginia typically require recent pay stubs to verify the borrower's employment history and income, which is crucial for assessing the applicant's ability to repay the loan. The loan application process. What documentation is typically required from applicants to verify their income during the loan application process? Is it A, tax returns for the past 2 years, B, credit card statements for the past 6 months, C, bank account numbers, or D, insurance policy documents? The answer is A, tax returns for the past 2 years. Lenders typically require tax returns for the past 2 years to verify an applicant's income, ensuring they have a stable financial history. Which of the following impacts a borrower's debt-to-income ratio in the loan application process? Is it A, monthly rent payments, B, age of the borrower, C, geographical location of the property, or D, the interest rate on the loan? The answer is A, monthly rent payments. A borrower's monthly rent payments are part of their total liabilities, which are compared to their gross monthly income to determine the debt-to-income ratio. Why do lenders run a credit check on potential borrowers during the loan application process? Is it A, to verify the borrower's employment history, B, to assess the borrower's creditworthiness, C, to determine the value of the property, or D, to decide the interest rate for the loan? The answer is B, to assess the borrower's creditworthiness. Lenders run credit checks to evaluate a borrower's credit history, debt levels, and repayment patterns, which collectively determine their creditworthiness. What is a loan pre-approval letter and why is it important? Is it A, a document confirming an appraised value of a property, B, a lender's initial agreement to loan a certain amount to the borrower, C, a letter from the real estate agent confirming property selection, or D, a document that outlines the final loan terms and conditions? The answer is B, a lender's initial agreement to loan a certain amount to the borrower. A pre-approval letter from a lender signifies an initial conditional agreement to lend a certain amount based on an evaluation of the borrower's financial situation. What is the primary purpose of providing a loan estimate to potential borrowers? Is it A, to lock in the interest rate, B, to inform the borrower of the likely costs associated with the mortgage, C, to verify the borrower's employment status, or D, to finalize the loan agreement? The answer is B, to inform the borrower of the likely costs associated with the mortgage. A loan estimate provides potential borrowers with detailed information on the expected costs, fees, and loan terms to make informed decisions about proceeding with the mortgage. What is typically the first step in the loan application process? Is it A, submitting a loan estimate, B, completing and submitting a loan application, C, obtaining homeowners insurance, or D, signing the closing documents? The answer is B, completing and submitting a loan application. Completing and submitting a loan application is typically the first step. This allows the lender to gather all necessary information to assess the borrower's ability to repay the loan. What is the purpose of providing a loan application fee? Is it A, to cover the lender's initial cost of processing the application, B, to reduce the principal amount of the loan, C, to ensure the borrower gets a better interest rate, or D, to pay for the title insurance? The answer is A, to cover the lender's initial cost of processing the application. The loan application fee covers the lender's administrative costs for initial processing. It ensures that the lender can review the applicant's financial information and creditworthiness. Underwriting for Virginia real estate. What is the primary purpose of a debt-to-income DTI ratio in the underwriting process for Virginia real estate transactions? Is it A, to determine the value of the property, B, to assess the borrower's ability to repay the loan, C, to evaluate the legal status of the property, or D, to forecast future property market trends? The answer is B, to assess the borrower's ability to repay the loan. The debt-to-income DTI ratio is a key component in underwriting, as it helps lenders assess whether a borrower has enough income to meet their current obligations while managing the proposed mortgage payment. Why is a credit report critical in the underwriting process for real estate loans in Virginia? Is it A, it ensures the property is properly zoned, B, it provides the lender with information on the borrower's financial history, C, it guarantees the borrower has no outstanding debts, or D, it confirms the property is free from liens? The answer is B, it provides the lender with information on the borrower's financial history. A credit report is essential in the underwriting process, as it helps lenders evaluate the borrower's credit history, including past and present financial behaviors, which informs the risk assessment and loan approval decision. Which document is typically reviewed by underwriters to verify a borrower's employment status in Virginia real estate transactions? Is it A, lease agreement, B, pay stubs, C, mortgage statement, or D, credit report? The answer is B, pay stubs. Underwriters review pay stubs to confirm the borrower's current employment and income, ensuring that they have stable and sufficient earnings to afford the loan payments in Virginia real estate transactions. In the context of underwriting for Virginia real estate, what does LTV ratio stand for and signify? Is it A, loan-to-value ratio? It assesses the borrower's equity in the property. B, lease-to-value ratio. It measures the rental income potential. C, loan-to-venture ratio. It determines investment potential. Or D, lease-to-venture ratio. It evaluates rent compared to investment. The answer is A, loan-to-value ratio. It assesses the borrower's equity in the property. The loan-to-value (LTV) ratio is used to compare the loan amount to the appraised value of the property, indicating the amount of equity the borrower has, which is critical in assessing the risk of the loan. How does an underwriter in Virginia ensure that the property is a viable security for a mortgage loan? Is it A, by conducting a property inspection, B, by obtaining a property appraisal, C, by reviewing the title report, or D, by checking the borrower's employment status? The answer is B, by obtaining a property appraisal. An underwriter obtains a property appraisal to determine its market value, ensuring it is sufficient security for the mortgage loan. This is a key step in underwriting to mitigate risk. What factor primarily influences the underwriting decision in Virginia real estate finance? Is it A, borrower's employment history, B, credit score, C, debt-to-income (DTI) ratio, or D, down payment amount? The answer is C, debt-to-income (DTI) ratio. The debt-to-income (DTI) ratio significantly influences underwriting decisions, as it reflects the borrower's capability to repay the loan by comparing their total monthly debt payments to their income. What form is typically used to aid underwriting decisions by detailing property condition in Virginia? Is it A, title insurance policy, B, home inspection report, C, mortgage note, or D, broker's price opinion? The answer is B, home inspection report. Underwriters use a home inspection report to evaluate property condition, identifying potential risks or required repairs. This ensures the property's viability as loan collateral. Loan closing. What is the primary purpose of a loan closing in Virginia real estate transactions? Is it A, to finalize the loan agreement and transfer funds, B, to assess the buyer's creditworthiness, C, to negotiate the sale price of the property, or D, to advertise the property to potential buyers? The answer is A, to finalize the loan agreement and transfer funds. The primary purpose of a loan closing is to finalize the loan agreement and ensure the transfer of funds necessary to complete the real estate transaction. This is when all parties sign the required documents. Which document is typically required by lenders to confirm the value of the property being financed? Is it A, home inspection report, B, title insurance policy, C, appraisal report, or D, purchase agreement? The answer is C, appraisal report. An appraisal report is required by lenders to confirm the market value of the property. This ensures that the loan amount is supported by the property's value. What is the purpose of the Real Estate Settlement Procedures Act (RESPA) in the loan closing process? Is it A, to prevent discrimination in lending practices, B, to require disclosure of all closing costs and procedures, C, to regulate interest rates on mortgages, or D, to guarantee loan approvals? The answer is B, to require disclosure of all closing costs and procedures. The Real Estate Settlement Procedures Act, RESPA, ensures that consumers are provided with disclosures about the costs of the mortgage settlement process and protects against abusive practices. Who is typically responsible for certifying the property title during a loan closing in Virginia? Is it A, the property seller, B, the real estate agent, C, the lender, or D, the title company? The answer is D, the title company. Title companies play a critical role in the loan closing process by certifying the property title and ensuring it is free from any liens or defects. They provide title insurance to protect against title issues. What is a closing disclosure in Virginia real estate transactions? Is it A, a document outlining loan estimates provided at the start of the loan process, B, a settlement statement provided to the buyer and seller before closing. C, an agreement between the buyer and seller regarding property condition. Or D, a mortgage application form detailing buyer's financial information. The answer is B, a settlement statement provided to the buyer and seller before closing. A closing disclosure is a critical document provided before closing that details all final loan terms, the buyer's and seller's closing costs, and the loan's financial implications. It ensures transparency and compliance with RESPA guidelines. Which document outlines the final terms of the mortgage loan and is provided to the borrower 3 days before closing? Is it A, closing disclosure, B, loan estimate, C, promissory note, or D, deed of trust? The answer is A, closing disclosure. The closing disclosure must be provided to the borrower 3 business days before closing. It outlines the final loan terms and closing costs, ensuring there are no surprises at closing. Who typically prepares the settlement statement during a real estate loan closing in Virginia? Is it A, buyer's real estate agent, B, seller's real estate agent, C, closing attorney or settlement agent, or D, mortgage broker? The answer is C, closing attorney or settlement agent. In Virginia, the closing attorney or settlement agent is responsible for preparing the settlement statement, ensuring that all figures are accurate and comply with lender requirements. Virginia mortgage disclosure requirements. Which document provides borrowers with an outline of the terms and costs associated with their mortgage loan in Virginia? Is it A, closing disclosure, B, loan estimate, C, good faith estimate, or D, credit report? The answer is A, closing disclosure. The closing disclosure, required by the TRID regulation, provides the final terms and detailed costs associated with a mortgage loan. When must a lender provide the loan estimate to a mortgage applicant in Virginia? Is it A, within 3 business days of receiving the loan application, B, at the time of closing, C, within 5 business days of receiving the loan application, or D, 1 week after receiving the loan application? The answer is A, within 3 business days of receiving the loan application. The lender must deliver or mail the loan estimate to the borrower within 3 business days of receiving the application to comply with TRID regulations. Which law requires the provision of the loan estimate and closing disclosure to mortgage applicants in Virginia? Is it A, Truth in Lending Act, TILA, B, Real Estate Settlement Procedures Act, RESPA, C, the TRID, RESPA Integrated Disclosure, or D, the Fair Credit Reporting Act, FCRA? The answer is C, the TRID, RESPA Integrated Disclosure. TRID, a rule of the Consumer Financial Protection Bureau, integrates and simplifies the disclosures provided under the TILA and RESPA. What is the penalty for failing to provide the closing disclosure within the required time frame before closing in Virginia? Is it A, no financial penalty, B, up to $10,000 fine per day, C, up to $1,000 fine per day, or D, loan application rejection? The answer is C, up to $1,000 fine per day. Lenders must provide the closing disclosure at least 3 business days before closing or face fines up to $1,000 per day of noncompliance as per TRID regulations. What key information is not included in the loan estimate provided to Virginia mortgage applicants? Is it A, the interest rate, B, total closing costs, C, monthly mortgage insurance premium, or D, detailed property title history? The answer is D, detailed property title history. The loan estimate provides details on the loan terms, including interest rates and closing costs, but does not include property title history information. What is the purpose of the closing disclosure in Virginia? Is it A, to provide the terms of the mortgage loan? B, to outline the final details of the mortgage loan and closing costs? C, to advertise the mortgage lender's services? Or D, to provide information about housing discrimination laws? The answer is B, to outline the final details of the mortgage loan and closing costs. The closing disclosure outlines the final terms of the mortgage loan and the closing costs. It must be provided to the borrower at least 3 business days before closing. When must a lender provide a closing disclosure to a borrower in Virginia? Is it A, at the time of loan application? B, within 3 business days of loan approval? C, at least 3 business days before closing? Or D, at the closing table? The answer is C, at least 3 business days before closing. The closing disclosure must be provided to the borrower at least 3 business days before the closing date to ensure the borrower has enough time to review.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.